Well, joining me now is Tom Lee. He's a Chief Investment Officer and Portfolio Manager at Fundstrat Capital. Tom, great to see you here at the New York Stock Exchange and on that opening bell podium. Congratulations.
Yeah, thank you for having me.
Yeah, it's wonderful to have you. Give our viewers a better sense as to what this particular fund entails.
Well, it's a concentrated ETF. It buys the strongest stocks and the most important themes that are driving the global economy, like AI, cybersecurity, millennials, and we find stocks that are exposed to multiple themes, and that's what makes it a granny shot.
Interesting. And how has it been performing in this market environment?
Well, it's actually a high or beta ETF, so it's going to be going down when the market goes down, but what we are thinking about is the longer term themes, and these are still in place. I mean, even if we're talking about tariff concerns, when we emerge from this, these are going to be the best performing stocks with the strongest earnings growth.
Yeah. So we do see, of course, amid tariffs, as you mentioned, that major indices are down about double digits right now. Does that seem like a buying opportunity to you?
Over the last 100 years, whenever the market has rapid declines like this, it's always been a buying opportunity. I know investors are really nervous because we're in the middle of peak uncertainty, but if you can put on your investor hat, these are always great opportunities.
And where do you see the opportunity in this kind of environment right now, based on some of those longer-term themes that you walked us through?
Well, I think the themes that are going to come out strong are going to be things that make American companies differentiate. So I think AI is going to be a theme that we're all going to come back to. The U.S. banks and the financial sector are also really strong. Of course, they're caught up in this uncertainty, and U.S. industrials. So I think it's that and a combination of small caps as well.
Is there a time frame that you anticipate that this uncertainty might resolve itself?
Well, I think we're through peak uncertainty. I don't know if we're through peak maximum pain in terms of earnings revisions, but I think within a month, all of this gets resolved.
Interesting. And what does a resolution look like in your view?
I think one way is a positive policy shock. The U.S. strikes a deal with one of the key nations, and I think investors then have a template to say, now I understand how we sort of have a roadmap going forward, and that could happen anytime.
Now, in terms of President Donald Trump's comments on the Federal Reserve Chair, Jerome Powell, what does that mean to this uncertainty right now?
I think markets would not like an early removal of the Fed. Investors are already concerned about the covenant of capitalism being affected. We need stable regulatory environments, and then removing the Fed would undermine the idea of the strongest, most powerful entity in the world is no longer independent. That would scare investors.
Interesting. And in terms of the path forward for interest rates, what do you think is the right move on that this year, whether it's cuts, staying steady, or potentially hikes?
I think the Fed, of course, has to be patient because they want to see what the tariff deal looks like. But I think if you look at inflation break-evens, they're telling us inflation would be transitory, a transitory risk. So I think rate cuts are actually coming later this year.
All right. Tom Lee here at the New York Stock Exchange to celebrate the opening bell. We enjoy watching Tom on CNBC a lot as well. Tom, thanks so much.